So, quick update on Bitcoin. Now, in the lower time frames, we're starting to look very, very bullish. Recently, we've managed to cross some of our very important moving averages. We've managed to cross our EMA ribbons. We backtested and held both our Fibonacci line at the 618 fib and this very, very important trend line from this asymmetrical triangle. Like I said, lower time frames really starting to look good. However, towards the end of this video, we are going to differentiate between what is going on in the lower time frames and what is going on in the higher time frames, because I am of the opinion, I've been saying this for the past week now, that we are going to break bullish specifically into the next 10 days when the next FOMC meeting is on the 15th of June. After the FOMC meeting, I believe we are breaking bearish. So this is why we're going to start off on the lower time frames, talk about what to expect over the next 10 days, and then we're going to jump into the higher time frames, look at some Fibonacci's, and talk about some price levels that we're likely to come and visit. Let's jump right into the video. So, like I said, I'm actually going to do something which I literally never do. If you're a seasoned veteran to my channel, then you would have never even seen me do this either. So I'm going to be looking at the 5-minute time frame, and there's a specific reason why I'm doing this, because within one 5-minute candle there was 234 Bitcoin bought over on Coinbase. Now, I went over to some other exchanges like Kraken, Binance, etc. and this was predominantly over on Coinbase. So this is very interesting. It seems like one particular whale probably accumulated a large amount of Bitcoin, because bear in mind the other candles before this are like 56, 64, 31, 27. This was a selling candle, but the previous buying candle before that was 15. So we've been seeing some pretty mundane buying candles recently, but at this moment in time, we had a huge pump earlier. A couple of hours ago, we came back into the EMA ribbons of the 5-minute. We back tested them twice, and now it looks like we're setting up a pretty nice W pattern with a breakout target of approximately 30,150. Like I said, I really feel icky. I don't like looking at the 5-minute time frame. I don't even like looking at the 1 hour time frame. So we're going to be continuing this on the 4-hourly time frame. Now we've talked about the volume. Looking at the 4-hourly time frame, recently we came back, or we've flipped above these 4-hourly EMA ribbons. If we hop over to the daily, you can see we had a brutal breakout and a brutal throwback, and we literally perfectly for 1, 2, 3, 4 days held the 618 fib like clockwork. The 5th day, which is today, we are starting to move up, and very interestingly as well, we've now finally pushed above the 13 EMA. This is a really good sign. On top of that, if I clear up this chart a little bit, just so I can make it a little bit more black and white, because we had something like this, a trend line like this. I won't even draw the bottom, but we've back tested this trend line of this. This was an asymmetrical triangle. If we bring it back, you should be able to see this asymmetrical triangle pattern playing out right here. So the lower time frames are starting to look really good. The hourly as well, our momentum indicator of choice, which is the squeeze mom, is really starting to push up very hard. Hourly time frame, we literally look like in the next hour or two we're about to see a bullish flip of the EMA ribbon. So we could even have a throwback to approximately 30,000, which we're pretty much at now. So probably by the time I post this probably won't even be relevant, so ignore that comment. However, lower time frames, I do think we are gearing up for a nice move to the upside. Now, we've been crashing our head against the top of this channel at 30,700 for such a long period of time now. It's been very boring, but you can see literally since the 9th of May, so in the next 4 days, this would have been a whole month. We've been chopping and doing nothing, going sideways. So bear in mind, this is really not the time to be getting too overly bullish, too overly bearish. We do need to recognize that we are just literally trending sideways between a range. However, the breakout target of this range would be up here at 30,700. I do think we are gearing up for that move where we probably are going to break much more macro bullish. Now, I've been talking about this on what to expect coming into June, because if you're new to my channel, first of all, welcome to the channel. If you're not new to my channel and you've been watching my videos, if you're a veteran, also, what's up, peace. But I've been saying coming into June, I do think we are going to see 2 weeks worth of a rally up to the 15th. Now, bear in mind, obviously, I said that a little while ago, so it's now only 10 days. I believe we're going to rally over the next 10 days, potentially up to 34,000, which is both the daily and the weekly resistance over on this pattern that I've got planning out over here on this this different account. But if we hop over to the monthly, we could even potentially break as bullish as 35,000, which is the monthly resistance. Well, technically it's coming in at, well, I mean, it depends how you draw it. 34,900, 35,000. What's $100 difference? However, like I said, macro time frame, we really haven't changed anything. We're still super bearish, and we're going to hop over into the Heikanashis in just a moment. But I want to talk about a potential trade that I do see panning out, because previously we've been poking above this, failing a back test, poking above this, failing a back test, poking above this, failing a back test. I'm sure you know this as well. The more and more you test support or resistance, then the weaker and weaker it gets. So the more we come up, bash our head against the top of this, then the more likely it is that we are going to see a breakout. The same goes to the downside. If we were coming down and we were just crashing, ranging at the bottom of this, we'd be very likely to break down. However, we're almost doing the opposite. We really do keep on coming up to the top, and quite recently we've been coming back on the daily time frame, holding the 618 fib. If I line this up a little bit nicer, I know I've got a lot of lines on my chart, but nonetheless, 30,700. If we have a successful daily flip with a confirmed backtest of 30,700, bear in mind I will be updating you when I do plan on taking this trade. I will be looking to make a leverage long. Where would I be looking to make the leverage long up to? Well, first of all, I would have my first take profit all the way up here at 32,400, simply because it's probably good to assume the worst on this and then be grateful if the best does happen. But my higher price targets would be up here at both 34,000 and, once again, the monthly resistance coming in at 35,000 for Bitcoin. So that is the lower time frame. Bitcoin does look pretty good right now. I do think we are going to continue seeing a rally. A couple of warning signs before we do hop over to the macro time frame. The dollar, bear in mind, this chart is currently closed. The dollar and the stock market is closed over the weekend and is going to be opening tomorrow. If you do want to see this breakout of 30,700, definitely keep your eyes on the dollar and the stock market. The dollar started moving up on the last day. Friday it was moving up, and the stock market really got battered on Friday, and hopefully we can recover over the weekend. But if we look at this, you can see the Nasdaq is currently chopping up in these EMA ribbons, the SPY chopping up in these EMA ribbons. It's pretty much the same for everything. Google, Tesla's just had a big move down with a ton of selling volume. So the stock market is actually saying something different. The stock market and the dollar is saying that crypto is going to dump into next week. However, I think looking at this chart, we've literally done something that we've never done before, and that is the fact that we've put in 9 weeks worth of bearish candle bodies. And I said this, a week ago. I said that I don't think we would be putting in 10 weekly bearish candles, and it seems like this is what we're doing now, because we've started to have that first part of the rally, and I would really like to see some continuation over on this pattern coming into next week, before the next FOMC meeting over on the 15th, which is literally 10 days away. Before we do wrap up this video, I would like to talk about the higher time frames and just make people acknowledge that nothing has changed in the higher time frames. In fact, in the higher time frames, we're still exceptionally bearish. And yes, while we have had a very minor green candle, if I can find my original chart, here we go. While we have had a very minor green candle on the weekly time frame, you switch things over to the Heikanashis and you can still see that we are in a brutal downtrend. Now, a lot of the times this happens, you see these very thin candles where it looks like we want to break bullish, and we actually did start to move up on these on the Japanese candlesticks. But moving over to the Heikanashis, until you see this big move above previous resistance at 33,000, which is obviously pretty much our take profit target of the long, which should be indicative to you that we are super bearish. Even if we do move up to 34, 35, you can see the 50-day, I believe this is the 50-day. Let me just check. 50-day 50-day is coming in at around about 34,000 as well, which also oh, this was the original chart, which beautifully lines up with the resistance that we've got on this macro chart. If I take it back a step, you can see 34,000 was this big weekly resistance that we've been chopping in. So where should we expect the price to move down to? Because I've been saying in the macro term that I do think Bitcoin is going to go down to a very specific price, and I should probably mention that for those of you who are new to my channel. I think we're moving down to the 200-week moving average, which is coming in at approximately 22,000. And I highlighted this before, what I plan on, or what I believe is going to plan out. And this is something like this, where we bounce up to 34, maybe 35, 36, and then we come down, hit the 200-week moving average at 23,000 probably by the time that plays out, if it plays out in the next couple of weeks. So, you know, bear in mind, the longer and longer we take to come down here, the more bullish my price target is going to be, because the moving average is exponentially moving up over time. Obviously, we're taking in data from the past 200 weeks, and you know, you don't have to be a mathematician or anything. You take the moving average back, or you take a date range back to 200 weeks ago, and we're taking in data points from, you know, 6,000, 6,300, you know, 7,000, and then we're obviously taking data points from 3,000. So this is very evident that we are going to continue moving up, while we've got data points that we're taking into consideration up here at 70,000, 69,000 or so. So macro time frame, we're still very bearish, and I think we're moving down to 32 or 22 rather, especially after the FOMC meeting on the 15th. Why do I think we're coming down to the 200 week very quickly? Well, let's go back to the first bull run, 2013 bear market, or should I say the 2013 bear market instead of bull run. After the 2013 bull run, rather, let me say that again. After the 2013 bull run, we obviously had a big bear market, and we bottomed all the way down here in around about 2015. We had a big wick down, but what you'll notice is if we extrapolate this 200 week, we perfectly had all of the candle body closes on this 200 week moving average. This was literally where we bottomed. Let's go over another cycle. What happened in the 2018 bottom in December 10th, 2018? Well, as you can see, once again, if I remove this range, you'll see it a bit more clearly. But once again, we came down to the 200 week and we bottomed on not only the candle body closes, but the candle wicks. What happened in the pandemic scare of March 2020? Candle body close on the 200 week, candle body opening on the 200 week, and we pumped out of it. So literally every single time we come down to the 200 week, we're out within, you know, a month or two. And I do think this is what's going to be planning out in the monthly time frames, or higher time frames, should I say. I do think the likelihood is that in the lower time frames, Bitcoin has a pretty good chance of moving back up. And bear in mind, you do need to be super cautious when you are trading these markets, because yes, I am saying I do believe Bitcoin is going to move up to 33,000 and 34,000, but that is nowhere near as big of a move from where we would be when we're moving all the way down to 22,000. I mean, even from where we are now, I predict about another 26% drop. I mean, can you see that planning out? I don't think that's too bearish to expect one more sea of red coming in, you know, 1 day, 1 week, and then be done with it. I think that's probably a very conservative target, but a lot of people think we've bottomed already. A lot of people think 25,000 was the bottom. That's okay. I still do think we are moving down to 22,000 though. So like I said, we need to distinguish between the lower time frames and the higher time frames. Lower time frames, we're looking very nice. We are back testing the EMA ribbons right now. We've flipped the 13 EMA. We have broken out and confirmed a back test of this asymmetrical triangle. On the daily time frame, we've held a plethora of moving averages, and we've held the 618 fib. So it seems like we are going to be moving up in the short term, especially the daily squeeze mom. Daily squeeze mom is still heading up. 4-hourly squeeze mom looks like it's getting ready for a bullish flip. This is our momentum indicator, by the way, if you're new to the channel. And like I said, the hourly, we are starting to move up very nicely. Let's wrap up on the 5 minute, because it looks like we are having a slight push down since the last since we started this video, and you can see we're coming down. So Ideally, we'd really like to hold this 30,000 level. If not 29,900, we should probably really hold that level. I wouldn't pay too much attention on what is going on the weekends. Really, I would be waiting for that Monday opening. Keep your eyes on the dollar. Keep your eyes on the stock market. If you are hoping for Bitcoin to break bullish, then ideally you'd like to see the dollar start to top out from the opening at 102, move all the way down to around about 101.5, and then hopefully the stock market can get a bounce. Like I said, looking at the stock market is not too good right now. Google, Tesla, SPY, well, specifically the tech stocks like Tesla and Facebook are already falling out. And, you know, I call Tesla a tech stock, but, you know, a lot of people call it other things. But nonetheless, let's just run with it. Tesla, Facebook, a lot of these are already falling out of the moving averages, which is really not a good sign. So hopefully we see continuation coming into Monday. That is the most important part of this video. Do not get overly hyped up right now. Wait for the flip of 30,700 like I'm going to be waiting for. If we have a massive capitulation down to 28,600 again, then if you took a leverage long without waiting for that confirmed breakout of 30,700, then you only have yourself to blame. Like I said, what I'd be looking for is flipping this price, coming back down, back testing it, and then moving up. I think we'd have a very good chance of moving up into the next FOMC meeting, which once again is on the 15th. That gives us another 10 days until the FOMC, where we can hopefully rally, go up to some of these higher price targets like 34,000, and then coming into the 15th on the next FOMC meeting in literally, you know, we've got another week or so, another week and 2 days from the Monday opening, where we are probably going to start heading down to 22,000 in my opinion. That is all I've got over on the Bitcoin price in the short term and the long term. Remember, do not get too excited, do not get too bearish at this moment in time. We really do need to recognize that we've been trending sideways for an entire month now, and until we have a confirmed breakout of 30,700, you know me, I'm not going to be getting out of bed. I'm not going to be making any leverage trades until we do flip and confirm this as support. That is really all I've got right now for Bitcoin. So best of luck if you're trading these markets. As always, not financial advice. Cowboy out. Peace.